Nano Dimension is a 3D printing company that offers 3D printing machines and services for the fabrication of additively manufactured electronics. Nano Dimension also produces nano inks for other areas in the electronics industry. So far, 2021 has been positive for Nano Dimension stock. So let's find out what's the forecast for NNDM stock in 2021. Hey go-getters, welcome back to the Early Investors, another good episode where you can learn to become financially free. In today's video, we'll be showing you whether you should invest in NNDM stock now. Before we dive into the video, don't forget to like and subscribe to our channel for more content about the best stocks in the stock market. So let's get into the video. Shares of Nano Dimension have plummeted as much as 10% recently after the company priced yet another direct offering. The deal is priced at $12.80 per American depository share, representing a meaningful discount compared to the closing price of $15.60. Nano Dimension has constantly been conducting direct offerings, increasing capital hand over fist. The latest deal is supposed to create about $500 million before fees and other offering expenses. The industrial company, specializing in 3D printing for printed circuit boards, plans to use the net proceeds for working capital and general corporate purposes. The previous direct offering was a $332.5 million deal last month. Nano is an Israeli company that calls itself an additive electronics provider. Additive manufacturing, or as it's also known, 3D printing, refers to manufacturing processes in which successive layers of materials are laid down in different shapes. That's the opposite of traditional machining techniques that focus on removing material by cutting or drilling, which are subtractive processes. Electronic circuitry traditionally has been developed with a back-and-forth process involving design, trial and error, and third-party outsourcing of manufacturing. The company thinks that process is now outdated. With its proprietary additive manufacturing technology, it has overcome the difficulties inherent in printing multiple layers of electronically conductive and dielectric materials at high resolution, which is what professional electronic developers need. Nano claims that they are disrupting, leading, and defining how electronics are made. Its flagship product is the DragonFly 3D printing system. It is said that it is the first and only precision system that produces professional multi-layer PCBs, RF antennas, sensors, conductive geometries, and molded connected devices for rapid prototyping. This is through custom additive manufacturing. PCB refers to printed circuit boards, and RF refers to radio frequency. It has been working on the system since 2014, and its target market is smart electronic devices that use printed circuit boards, connected devices, RF components and antennas, sensors, and smart products, including the Internet of Things. Its strategy is based on the razors and blades business model pioneered by the Gillette shaving company. Buy a razor once and then buy blades over and over again. Nano sells printers that require its own conductive inks, so sell one printer, then sell the proprietary ink continually afterward. It is making some sales. On February 9, 2021, the company announced it had earned $3.4 million in revenue in 2020. That was better than expected. Because of COVID-19 restrictions, the company's sales and marketing efforts were constrained. President and CEO Yoav Stern noted in the news release that their customers and prospects had been constrained to travel and capital expense restrictions and limitations on their engineers' visits for sales, installations, and support. Procuring breakthrough technologies has not been a priority for buyers struggling with a tsunami event like COVID-19. In a letter to shareholders recently, CEO Yoav Stern estimated that the company's 2020 revenue was approximately $3.4 million. Nano Dimension had $990 million in cash on the balance sheet before factoring in the subsequent capital raises at the end of the year. The COVID-19 pandemic crushed sales of Nano Dimension's DragonFly systems, and the company had expected to post no revenue last year. Sales started to recover in the second half of 2020, and Nano Dimension plans to use its war chest to accelerate its product roadmap in 2021 and fund its acquisition strategy. The company has retained financial advisors in the US and Europe to explore potential acquisition targets. Nano Dimension occupies a specialized niche within the 3D printing industry, a niche based on its proprietary ability to create 3D printed circuit boards and similar devices. It is financially strong, with no debt, and has raised about $1 billion in the past year, much from institutional investors. They now own nearly 10%. Given its short financial history as a public company and last year's pandemic, it isn't easy to value its shares. The 3D printing industry is poised for explosive growth. The market size in 2022 is expected to be 59% greater than 2020, or an average of nearly 30% per year. 2024's market is expected to be 155% greater than 2020, or nearly 39% per year. Nano has differentiated from other 3D printing services by specializing in the niche market of in-house PCB printing, with a combination of nanoconductive and dielectric inks. Most other companies in the industry focus on printing prototypes using resin polymers or other plastics. For the moment, it has the field mainly to itself, but acknowledges that more developed 3D companies may adapt their products to print PCBs. Still, it does have a competitive advantage or moat, which is its patented technology. Nano is in a strong financial position, thanks to rounds of financing in 2020 that raised about $1 billion. At the end of 2020, it had $990 million in cash and no debt. The cash is mainly earmarked for growth, both organic and by acquisitions. The company noted that it had profiled and scanned more than 80 potential acquisition targets across geographies and electronic industry segments and contacted and studied a large part of them in the release. All of that is good news for investors, with the caveat that the company chooses well when it buys other companies. Since Nano has no earnings, we obviously cannot look to a P/E ratio or PEG ratio. Based on revenue, we're stymied by the effects of COVID-19 on 2020's results, so there's no way to make any projections or establish meaningful metrics. It's expected to rise from $16 billion in 2020 to $40.8 billion in 2024. And assuming that demand for 3D printed circuit boards is as strong as Nano suggested, then projecting growth of 30% per year doesn't seem out of the question, and in that case, revenue would rise to $9.71 million by the end of 2024. That's interesting, but can we get beyond speculation? Nano has a war chest of nearly $1 billion. Its net loss in 2020 was $31 million, which means operations shouldn't need very much of that war chest, even if losses continue for several years at the same rate. It's more likely the losses will revert to the 2019 level of $7 million. Management, therefore, should have at least $750 million for organic growth or acquisitions. That amount will buy many potential competitors. It also allows Nano to buy complementary technology companies, broadening its market and reach. And it puts a lot of boots on the road to promote and sell the company's technology. Nano has a management team that has done well, a conclusion we can infer by the fact that it has raised $1 billion in a year dominated by the pandemic. Investors are not likely to part with that much money without seeing serious potential growth ahead. Institutional ownership jumped from just 0.49% on December 29, 2019 to 9.38% on January 31st of this year. The biggest institutional owner is Renaissance Technologies, which was headed by the legendary quant investor Jim Simons until recently. Renaissance now owns nearly 1 million shares. Summing up, we can't make an educated guess based on metrics. Still, we feel comfortable in guessing Nano Dimension will continue to grow its revenue rapidly, with higher earnings and share prices. So, should we buy Nano Dimension stock now? It seems fair to say that Nano Dimension has a bright future that could mirror the forecasted growth of the whole 3D printing industry. The technology should save its customers time and money, and that, in turn, should make it a profitable company. When that happens is a good question, but we can see the light at the end of the tunnel. What the company is worth is a question that can't be answered with much precision. Of necessity, Nano must be judged on the strength of its story and its promise rather than conventional metrics. That makes it stock for growth investors who like the story. Given the uncertainty of valuation, value investors will pass it by, as will income investors looking for dividends. Currently, Nano Dimension stock has a buy recommendation with a target price of $10. Nano Dimension stock is a risky bet because its excellent share count has grown significantly over the last year. The company's market capitalization has risen from $10.6 million in 2019 to $3.2 billion. The present shareholders should be conscious of the share dilution results as the company issues additional shares. New share offerings normally boost the company's valuation rather than gains in its stock price. Nano Dimension trades at an NTM EV to revenue multiple of about 265.2 compared to a multiple of around 5 times in August 2020. Well, that's all for today, pals. We hope you found the video helpful and informative. As you've all stayed with us to the end, don't forget to smash that like button and also subscribe and turn on post notifications to stay updated on our future posts. See you all next time.